inflation, there's kind of misleading aspects on both sides, and that's it. So, the misleading part about some of those year-over-year numbers that Joe was correct about is that you're comparing that one year where commodities fell into a hole, right? Because China just like stopped buying energy, stopped buying copper. They're the biggest buyers. They were totally shut down, and then you kind of exploded out of that big kind of down part. And so the year-over-year numbers are ridiculous. But for example, if you back up and you look at commodities over the past 10 to 15 years, most of them actually are not at all-time highs. So lumber is, that's been like it looks like a Bitcoin chart. And then you have gold touched new all-time highs in 2020. It's been in a correction, but it still touched it. Beef is at all-time highs. But for example, the overall, if you take an aggregate of most commodities, it's actually been in like a 10 to 15 year bear market. And it's because we had a period of, in the 2000s, you had a period of, China had a fast growth rate. There was a lot of commodity demand. We brought a lot of new commodity supplies online. And then when China slowed down and the whole world kind of adapted to this, we've been in this period of commodity oversupply. And so I think a lot of those year-over-year numbers, basically a lot of commodities are just getting back up to where they were before. Like oil is just back up to where it was before the pandemic. There's some like copper that are elevated but still not at all-time highs. And then there are some that are at all-time highs like lumber. But then the funny thing is if you look at timber, right, which is, before it becomes lumber, it's timber, that's actually, not that expensive at all. It's really about the bottlenecks of turning timber into lumber, right? So the basically the refining that has to go into cutting that up and getting it treated. And so a lot of that is about supply chain issues. Same thing we're having in the semiconductor industry where, there's not enough foundries to make the semiconductors. And so on one hand, kind of focusing on those year-over-year numbers can be misleading and can, for readers that know what those base effects are, that could even turn them off they think, okay, this people in this industry don't know what they're talking about. On the other hand, people that are saying there's no inflation, especially over these several years, are also misleading because CPI is a really crappy statistic for the most part. And I actually have a chart coming out later today that just shows, housing has gone up faster than a CPI, food has gone up faster than CPI, healthcare has gone up faster than CPI, tuition's gone up faster than CPI. The cover price of the New Yorker magazine has gone up faster than CPI, a lot faster. And so, basically we've had a couple deflationary areas like consumer electronics or things that you can outsource to China. Those have been, globalization, technology. They've really pushed down the cost for things. Same thing, your cell phone can now do what, 10 of your electronics could do, a decade ago. So that's been the deflationary area. But then pretty much anything you can't outsource or that isn't automated has gone up faster than CPI. And for most household budgets, that's still where they spend most of their money. Housing, education for their kids or themselves, healthcare costs, either through themselves or through their employer, which eats into their compensation total. Those are the areas where we spend most of our money. And so it's one of those things where we actually have had pretty significant inflation over the past, 10, 20 years. But that year-over-year number is still somewhat misleading for how fast it's been. Some of the things I'm looking at are the producer price index, which is kind of a precursor to inflation. That's been spiking. Just the overall kind of, you can look at the bottlenecks in the industry, like we talked about the semiconductors, we talked about lumber. We've seen that in shipping over the past few months, where just there's only so many containers and container ships, and so we have had various supply chain issues, and so that's how I'm monitoring it. Where it's often the case that the truth is in the middle, and that's what I'm finding here with inflation as well. That we are getting an inflationary impulse from this fiscal spending, but it's not like inflation is is absolutely massive in that 12-month period.
Yeah, I did. I don't even know if I retweeted it myself, but I did take a step back and reconsider it and thought, is this misleading? Are we getting... Look, there is a fear and a risk of inflation, but are we cheerleading this as Bitcoiners as a way to support our thesis on Bitcoin? I worry that we do that sometimes. And I was trying to theorize with, what is going on here with lumber? Is it because house prices are going up? I know out in the US, for example, a lot more properties are built using wood. Is there like an increased demand for house building, or is it anything else? I know, for example, here, because of the lockdowns, a lot of people have been doing work on their houses. So I spoke to a friend who's a plumber. He said they've never been so busy. There's so much demand. And because of that, there's demand for electricians, there's a demand for plasterers, there's a demand for carpenters. So is this just some pent-up demand? And people, the economy is finding a place for people's money to go because they can't have holidays. They're not going out to restaurants and to dinner. I kind of wondered, is it part that? Also, is it part pent-up demand with the economy starting to pick up again as people come out of lockdown? Is it a temporary inflationary event based on supply and demand, less so than an increase in the money supply?
Yeah, so lumber does have some of those temporary issues, and so as you pointed out, basically, in many countries, especially the United States, there's been a movement from cities to suburbs, and this big kind of grab for single family homes that in the U.S. at least, and some other countries are made up a lot of wood, and then there has been a lot of remodeling. And there's a bottleneck in terms of how many sawmills out there are able to turn timber into lumber. And now there's also a money printing component because, for example, if you didn't have the fiscal stimulus, if you didn't have the stimulus checks, the unemployment benefits, then fewer of these people would have been able to afford it. There would have been more solvency events. And so the prices would not have been able to go up as much as they did.
Okay.
Same thing, I've often pointed out that over the course of this pandemic, personal incomes are up, even though unemployment is down. And that's because we did various aid programs to keep people afloat, and so that allowed them to keep spending and do things like that. And so there is an element where the fiscal stimulus was a part of these prices going up, but for these individual things that are going up way too much, like semiconductor shortages or lumber prices, that's also due to specific supply chain issues that, given enough time, should be rectified. So, for example, I wouldn't buy a lot of lumber here and hold it for 5 years because there's however long it lasts anyway. But basically, this has capacity to eventually address itself. Whereas there are some other areas like, say, copper, where you can't just bring a lot of new copper to market, and so mines take a decade to bring online. They've actually been it's been challenging to find big deposits, and so there are areas where there are commodity bottlenecks. And actually, I find that when it comes to economists predicting inflation, I think the big blind spot that a lot of them have is the long-term, say 15-year commodity cycle, where you have these periods of there's tons of commodity demand, so a ton of people go out and find new commodities, then they oversupply the market, then we enter a long bear market, and then no one does any capex, or at least capex goes way down because it's unprofitable to do all the exploration and bring these mines up, and then eventually you get really tight commodity markets, and then price starts going up, and then you're like, oh no, and then we're behind on our capex, and so you have to spend years kind of keeping up with that. And so that long-term commodity cycle has a big impact on inflation, especially when you also consider different policies that are increasing the broad money supply, which is what we have seen over the past year, where the broad money supply has gone up a lot, and that certainly has been a big factor for prices.